What's good, y'all? What's good? I took a little hiatus, but I'm back with some analysis. Um, we're just gonna go through some analysis with pretty much one chart. We're gonna be focusing a lot on Forex, on futures, as well as stocks. I'm just gonna drop as much analysis as I can for you guys. So pretty much what we're looking at right now is zero JPY. So that's the Euro JPY for those who trade Forex. And just a reminder, man, the best option when you're trading Forex is to swing trade. I'm not a financial advisor, so let's just put that out there first. So whatever you're getting from me, just take it for educational purposes only. I'm not a financial advisor. Before you make any trades based on my calls, please go talk to a financial advisor. But all right, so let's get started. So we have Euro JPY, and like I always say, if you're gonna trade Forex, the best option is to swing trade it or even spot trade it and just not worry about it versus trying to do the scalps, because Forex have the tendency to do a lot of consolidation, and even with the consolidation, if you're trying to scalp it, you probably end up in a bad situation. So I say, if you want to scalp something like a 15-minute time frame, you can do so on like a futures prop firm account, something like that. But when it comes to Forex, my best option, what I would say, is to stick to swing trading, stick to higher time frames, 4-hour, daily, weekly, as you can see up here. So that's what I do, and that's what I focus on. This is a trade that I'm actually in right now, and I'm looking for it to hit this order block at the top, closing on this gap, and I'm just gonna kind of go into detail as to why I feel like this is what it's going to do. First and foremost, what we want to do, we want to zoom out to take a look at what the chart actually looks like. So looking at this, we can do something as simple as draw a trend line or draw trend lines in order for us to come to a conclusion as what this is doing. Now, me, for the long terms, I do trade harmonics from time to time, periodically, especially if I can see one clearly. I trade harmonics. So what we're focusing on is here on a long-term time frame. If we're looking at 1 month time frame, we could be focused on this box because this is clearly a harmonic pattern. If I line this out, we can say boom, 61.8 zone right there, and then we match. I know a lot of people are like, oh, it's harmonic, we don't trade harmonics. It don't matter. You trade anything you want to trade, and it's going to give you something, right? So if you look at this for the 61.8 harmonic right here, 61.8, you look at the 161 and the 261 matching perfectly, which will give you a perfect harmonic up to this zone, and that lines up perfectly as well with the high that's sitting up top here, right? So that's the confluence for the major play. So we can, if you're a spot trader, this is a solid play for you. You can pretty much just kind of hold that from here and just run up. Now for those swing traders, so this is what I'm seeing as a spot trader. If you're gonna hold this for months and years, you have a nice solid trade, and you can run this from, let's see, from the bottom here up to like 5,000 to 6,000, almost 6,000 pips. So if that's the type of trader you are, there you go. I just gave you a play. Let's go. So now what we're gonna do, we're gonna focus on, for the more immediate retail traders down here, we're gonna focus on this zone, right? And I'm just gonna give you this play, as that's what I do best. I like to give plays. We're gonna focus on this zone within this box right here. So let's kill out the background. So with that being said, this is what we're gonna focus on, the immediate play. We just want at least this play right here for the monthly time frame. And if you look, if we run that, that's a good 1,000 pips, even up to 400 pips. You can get a lot of pips off this play and just stack it and let it run. So if we go down to a lower time frame, so remember, top down analysis, especially if you swing trading, and we're talking swing trading when we're talking Forex. So if you look at it top down analysis, if we go back down to the weekly time frame, we can start seeing we have the consolidation here, but we can start seeing that it's pretty much revving up for it to run up. So like I said before, if you want to use elementary ways of trading, you could just use a trend line, draw a trend line right here, and the trend line will show you that this is going to set to run up, as it broke the trend line and then it also bounced off the trend line, and you can see the confirmation even going down lower on the daily time frame. And this is what we're seeing, and this is probably the best time frame for this actual play. And remember, you want to focus on what I call low-hanging fruit when you're looking at these trades, when you're looking at these charts. You don't want to try to complicate anything like all these YouTube traders be doing, and all these so-called gurus. They want to complicate everything. You don't want to complicate anything. You want it as simple as possible, because remember, the actual reason why you're trading is to make money. It's not to look good. It's to make money. So as you can see, there's order blocks sitting up top. You have order blocks up here. Let's do that. Order blocks up. This order block up here with the liquidity up top, and another order block up there, and all the way up there. So these are the minor order block, breaker block, all of that good stuff, right? But just to not confuse you, we could do something as simple as drawing a trend line. Run that trend line. We could run that trend line. It don't even have to be perfect. We could run that trend line. Nice little triangle right here. It's breaking out the triangle, and all we need to do is aim for this high right here for us to have a solid profit. Remember, low hanging fruit, and that'll give us a good 500 pips, almost 500 pips. I'm anticipating this to run even higher though. It can hit the actual the order block up here, or you can aim for the previous high up there, because if we're judging it based on the higher time frame, that's what it's going to set to do, right? So if we're judging it based on a higher time frame, it's only consolidating because this is a supply demand zone for it to consolidate, and it's going to aim to run up that top. Now another thing is, if you do use indicators, so hold on, let me run down, you know, as low as a 4-hour time frame, we could run that too. So now the other confluence before the indicators is if you draw the fib on here, you see a perfect 61.8 bounce. It only consolidated on the 23.6. This is usually the zone where it does consolidate. Keep that in mind whenever you're trading fibs. Around this zone is when it actually consolidates. And if you take a look at what's at play, take a look to the left. The negative 27% and the negative 61.8 are the actual zones. You see this? Boom, right on that order block. Boom, right to the bottom of that order block. And that's some more confluence for you to actually have a solid trade. So no matter your style of trading, this is a solid play, and we're gonna aim for this for the sake of this video, to kind of track this, to make sure everyone is on board with it. We'll probably aim for the negative 27 zone, 166.7 166.7 price point. So we're gonna track it, and I'm gonna update periodically, but for the most part, this is a nice solid play, a nice swing trade. If you just hold it and let it run, you'll have a nice play. And what I was saying before, if you do decide to put the MA on there, you also see the MAs agree as well. So the MAs are pretty much letting you know that it's set. You know, it's set, it's doing its thing. So that's if you want to use indicators. So as for everything else, you know, you see, if you're just using price action, everything is as clear as day, and we can definitely see this gap is going to be closed into. Trend line is looking pretty solid, pretty beautiful, and then also the actual overall time frame when it comes to harmonics, that's a nice play as well. So we have our directional bias for it to run up, and all we need is a small chunk of it. So if it goes up, when it goes up, you hit this zone and it retraces, you could put some more, you could, you know, take your trade out, you know, close all your trades, nice 100 pip, No, you can't get mad at 100 pip. You get a nice $1,000, $2,000, $3,000 easy off this play with standard lot sizes. But once it retraces, you put some more standard lot sizes on there and run it to the negative 27. So that's what I'm seeing for Euro JPY. Let me know what you think. Leave a comment, share, subscribe, all that good stuff. And as always, y'all, let's make this money. Let's go.